My name is Gregory Smith. I'm here on the first Knowledge Saturday to help support Warren Thorne and his movement that he's starting here at the MLK Center. I got involved with Knowledge Saturdays because I like how he was targeting the youth, because I enjoy spending time with the youth about their own history, because I'm in my late 20s and I'm not just finding out a lot about my history, so, and I enjoy it and I like it, so I know educating the youth on where they came from and powerful and positive people that came from their background, I know they enjoy it too. So that's why I got involved with Knowledge Saturdays. And my duties here is just basically, I like to call myself just a helper. You know, Warren, he pretty much coordinate who we want to talk about, what important topics we discuss on Saturdays, every third Saturday. And I just love backing him up. So obviously I know he comes with a lot of good ideas. So whatever he want to roll with, or whatever positive role model he want to talk about, I know I'm usually down with it too. I just want to do my part and help getting information out there when we come on Saturday with that information. So that's why I joined Knowledge Saturday, and that's why I want to be a part of it.
Credit is really important, especially for buying a house. A lot of times people want to buy houses, but their credit's bad. So anyway, before we start, I want y'all to do a quick quiz. Does everybody have a cell phone with Wi-Fi or data? And if you don't, everybody have a cell phone? Okay, and if you can partner up with people next to you. It's really, really quick, just to see what is your knowledge base on credit. So this is how you go. If you have some trouble logging on, so it's besecreative.com. You'll be a student, and the teacher room is 6.
Is your credit score better or is it worse?
It doesn't have any.
It's
nowhere.
So until like you get a credit card, that's when like your score starts.
So there's a lot of people who, if they only pay cash only, they have no credit.
So like at the beginning, does it start at the top or you start at the bottom?
No, that's a good question. Does anybody know?
At the beginning, you say at the beginning?
Yeah, I know you're not at 850.
900 or
No.
You're not there.
You have no credit. Zero. No credit history. No anything.
When they say no credit, now they say no credit just like having bad credit.
Yeah.
You don't have any credit. No credit.
Because they have
You
no.
don't have none. You don't have no history.
Yeah, you have no history. So they don't know if you're crazy or not. But if you have bad credit, they already know you crazy.
Well, how do they just let an 18-year-old have a Neiman Marcus card, or how do they?
They just lie about the.
Oh, yeah.
I mean, the 18-year-old just lies about the income. I make $1,000 a month. Or, that little income part where you could just make it up and they don't
So they just
verify.
have
They don't verify.
No, they don't verify. But they'll give like, if you go to get a store credit, it's normally low, like 300 to 500, and then once you've been paying on it, they're like, oh, you just got an increase. I don't know if that happens.
Yeah.
I don't have store credit one, but I have my Discover. I just paid it down, and they increased it by 5,000 because they want me to go crazy. That's what they want. And there'll be some other information in there too. I made it really light because I was like, well, most of the people would be young, so I didn't get too detailed about it. But it is very, very important. Why do you think a credit score is important? Anybody? Why do you think? You can buy a house, that's one thing. What does a credit score say about you? It's a 3-digit score that says, what do you think it says about you?
It says that somebody trusts you and paying something back.
That's pretty much it. Are you financially responsible? So you get judged on this three digits, these 3 digits. All right, and you can beat it too. So if someone in here does have a low score, there are ways to raise it. And for those of you who are not of age yet, you'll know better. All right. So the key to getting your score, improving your score, or starting your credit is to know exactly how it is calculated. Okay. All right. So there was a question in there. What is the highest score you can get?
Somebody said 300?
Oh, you know what? I think I put I had a typo. If you chose 800, you are still correct. Did y'all get 800? You got 900? It's 900. Okay.
Well, is it possible to get 950?
No,
Oh.
it's supposed to be 900. So I made a mistake, but if you chose 800, you are still correct. Alright, so the scores between, I haven't met anybody in the 300 range, but it is possible to be that low. Alright, so like, what was your name?
My name is Chris.
Okay, Chris. Basically, the score determines are you able to repay your debt. Would you give somebody a loan? Would you lend a friend money if they had a 300 credit score?
No.
Back. You might not get that back. Alright, so this basically, it shows you, alright, delinquency rate is basically, y'all know what delinquency is, right?
Bad person.
Bad person.
Basically, they're not paying anything back. So this basically says, this is how they judge you when you're buying a house, getting a car, getting insurance, getting a job, whatever way. Basically, if you have a 300 to 499, they're saying that you're more than likely not going to pay back, just like you wouldn't loan a friend who had 300 credit score. People down here only have a 1% of not paying back. So these people are going to be more qualified to get a better loan and a better interest rate. So that kind of shows, and the average person is somewhere in this range. The average American is about, I think, 670. Alright, so what is considered a good score? This is how they break it down between excellent, good, average, poor, bad, and miserable. This is miserable. Yeah, so you determine, when they pull your score, credit score up, like when you do go to a car dealership, like I just went to a car dealership last week, I'm going to divulge some personal information. I was a 674, but they have a different tier. So I was in there, I wasn't at the top, but I was like right below the top, so they give you your interest rate based on that. And you can move, you can jump, probably on average within 6 months, you can jump between the different tiers. So this is typically the basic breakdown according to FICO. But each different agency has their own way to score you. Alright, that's pretty simple. Alright. So what can you do to increase? So this will affect, people who already have credit, and then for you who will be starting your credit in the next few years, this is something to know also. Alright, so first you have to understand how do they calculate your credit score. That's the only way that you can know how to improve it. Alright, so this is very, very important. Your payment history is the main thing. So whenever you are looking, basically a late payment shocks you the most. A lot of people don't know that. But making one late payment, like 30 days late, 60 days late, especially student loans and credit cards, car note, anything, house note, like they just foreclose your house. But this is the most important chunk. So basically, pay your bills on time. And the amount of money owed. So that's really important, is how much credit do you have to your name. So if you have multiple credit cards, so like say you have $10,000 credit limit and you owe $9,995, that's going to be a problem. So the more money you owe, like the more cars you have, the bigger the house you have, it affects your credit. But installment loans aren't as bad as revolving credit. And then the length of your credit history. So y'all answered like 25 was a good age. You can actually start, it would be best to start at 18. But can't be crazy. So if you do get a credit card at 18, I had my first credit card at 18, but I was scared of credit, so I only charged like $100. So whenever I pull up my score, it says I did positive because I've had it for 20 years. I'm not gonna tell you my age, but over 10 years I've had a credit card. So I get a lot of checks for that. Had I started at 25, I wouldn't have as much positive, I guess, positivity with that. So if you are 18 and you do get a credit card, get a secured one and get a little gas card that's maybe like a real small credit limit, just to make sure that you're actually building your credit, but you're not going to go crazy. They used to prey on college students. Some of y'all,
They still do.
They still do.
they still do?
Yeah.
Okay, they made a law.
Yeah, they got when I always got the table there, and on that table, when I went down, I got a freshman in college, the credit card tables are still sitting there. But you
Yep,
get
free
credit
pieces.
card,
They're
yeah.
well, there was a law where they had to stop preying on college students. I guess not everybody's on the law. But it's very important that those of y'all who are approaching 18 or whatever, be very mindful of your spending. I would say don't spend more than 100 and make sure you pay it off, and do it only for the purpose of building your credit. That's one thing. All right. So you can start at 25 if you want to, but if you try to buy a house within the next year or two after that, you're going to have a harder time because you won't have enough credit history. All right. So new lines of credit. What happens is if you go and start trying to get personal loans and lines of credit, every time you hit an inquiry on your credit, it brings it down. So it's very, very important that if, say you're shopping for a car, you shop for a car within 2 weeks. Because it won't hurt your score because they know you're shopping for a car. Same thing if you're trying to get a mortgage, you do it all within 2 weeks. So they know you're trying to shop for something, so it's not going to knock your credit down that much. And then types of credit used is another thing. So y'all heard of good debt and bad debt, right? Can anybody give me an example of what good debt is?
House.
Yeah,
House.
a house is good debt. Whatever else you think is good debt, or you heard that's good debt. Nobody?
Student loans
Car.
can
Land.
Student loan.
be. Can be.
Yeah, so they are. Well, you don't think they're good because you got to pay them every month. But they are actually good because they're installment loans. They have a beginning date and an end date, and just a solid payment compared to revolving credit like credit cards and what's the other revolving credit? Personal loans. Basically, you can just run up a credit card. And it's not backed by collateral. A car is backed by collateral. Student loan, that's not backed by collateral, but it's still considered good.
By child support. That's good one or bad, right?
I don't know. I didn't see that in my research. I know they will snatch your tax refund if you do child support. Just throwing it out there. That's what I have to research that.
Your tax support on your credit?
Huh?
They go on your credit?
Yeah.
They can take your
Oh,
they can
no.
take your
You know that?
They can take your driver's license.
You have kids?
No, no kids. No kids.
You don't have that till you turn 30. That's my best advice.
Yeah, so installment loans are termed good and revolving credit are termed bad. So basically have less credit cards. So if you have student loans, it's not the worst thing, and a mortgage is not the worst thing either. I don't know how she's gonna live anyway. Alright, so there's the 5 variables. This is what they use to judge you. And that's what you can use to act.
Yeah, that's right.
That you need to have it.
What's a good credit score?
I know. The highest one.
What you like?
I don't have credit.
You don't have credit? Everybody knows good.
I won't plan to be responsible with your money and try to be. If you have a credit card, you're gonna keep it in our card.